In this presentation, we're going to set up bank rules related to bank feeds, which are going to take one transaction and split it to two different accounts. So we have one transaction, one vendor. We need to split it between two different accounts. We're going to do that with the use of ratios. The example we will have will be with regards to an auto. We have an auto that's going to be some percentage personal use, some percentage business use, and therefore we want to take each transaction related to the automobile, break it out in some percentage between those two accounts. Here we go with Xero. Here we are in our Triple G dashboard. We're going to start off by opening up our financial statements, balance sheet and income statement this time. Going to our accounting drop down, opening up that balance sheet reports. Once opened, we will duplicate it. Going up to the tab up top, right-clicking on that tab, duplicating that tab. We'll do the same for the income statement, going back to the tab to the left so that we can then go to the accounting drop down and back down to that income statement, the other financial statement that we want to see. Once opened, we will then duplicate that tab by mousing over the tab up top, right-clicking on it and duplicating that tab. Let's change the dates now. Go into the balance sheet tab. We want the dates for May. We want to be able to include the May data because that's the month we're working in. So we're going to bring this out to May 31st. That should work. And then we're going to go back to the income statement. I'm just going to change the beginning date this time for May because I don't need the other stuff before that time period to distort or confuse us. So there we have that. And then we're going to go to the first tab. We're going to go to our accounting drop down. We're going to go down to the bank accounts. And we'll be dealing with, of course, our bank feeds, of which we have 27 at this point. We're going to select that reconciling item. And we're looking for anything related to an automobile. We're going to say that we have an automobile and we use it for both business and personal use, and we want to get kind of an idea of the breakout. Now, again, if you're doing this for taxes or something like that, you'd want to talk to your CPA or something to talk about, how are you recording the auto expenses and whatnot. But here we're going to say that that's one we want to split out between 60% business and 40% personal for our purposes. So I'm going to go down, I'm going to look for anything like auto-related. Here's a Shell gasoline. So Shell gasoline, anytime I pay for gas, I would like to break that out 60-40, 60-40. So what we're going to do is set up a rule. I want to say options. This is going to be creating a bank rule. And then we have the rule. It's going to give us our normal stuff up top, more stringent kind of rule on number 1 where it says all conditions met. This time I'm usually going to say give me any condition. I'll be more broad for this one this time. I don't need this first one at all because it's not giving me any more information. Then the description equals. I don't really need it to equal. I can have it anything contains. I'll typically be more broad like that. If it says Shell gas, it's going to be something, gas related, I would assume, auto related. So that's all I need. And then the contact information I'm going to say is Shell as well. For our contact, that's going to be basically our vendor in this case that we're going to add if it's not included already. If we wanted to set up a situation where we're going to say, hey, look, I want you to take, $20 out of the gas bill each time and make that business related and make the rest personal, then you could do something like this, add in a line item up here and pull out the same dollar amount that you would like to apply to, say, business versus personal. We are going to use a percentage method, which is probably more common down here. So then I'm going to say description. Let's just say auto business. And I'm going to say this is the account auto. There's one. That's an expense type of account. And this time I'm going to make the percentage. I'm going to change the percentage, say 60%. And then I'm going to add another line. And we're going to say this is auto personal. And you might say, well, how am I going to break out the personal here? I paid it out of my business account. How am I going to break out the personal? Well, we're going to assume it's the same thing as if you took the money out as a draw and then paid for your own gas. Right? You're not going to make two separate checks or write two separate checks to the gas station or pull out the credit card like halfway through. Well, you can, split it out, and we'll just simply put the personal side to the equity account. So I'm going to go on down to the equity account, and we'll say we need this side go into equity. And we're going to say this is the owner's capital, the draw. It's going to be a draw. So it's not going to be affecting the income statement, but the balance sheet. And this is going to be the 40%, of course. And that'll add up to the 100%. So we have the 100% down here. We're going to keep this the same, just apply it to the checking account. We could apply it the same thing to the credit card, you may want to do that. So you might say, hey, I need this going to all my credit cards and whatnot that I'm going to be, using for our accounts here that we're accounting for within Xero. And then it's going to be called the shell gas. We might call it auto rule. This is the auto rule. All right, so I'm going to save that and see what happens then. Well, we know what's going to happen. It's going to apply the rule to all the Shell gasolines and breaking them out on a 60-40 split. So let's just observe what we know is going to be taking place. So here we have the Shell. Here's the $70, and it's applying the auto rule. So if I was to say then, okay, let's apply them all out, and then we'll look at them all at once. So we're going to go back down. It should apply that to any time we see Shell. There it is. Auto rule. I'm going to say okay. And then and that's it. Oh no, it's not it. Let's go to the next page. We have 3 pages here. So let's check it out and see if we have any more on this page that we can apply out. So mobile, I don't see any here. Is that it? Nothing there. One more page. Let's take a look at the last page and see if we have any more of those Shell gasoline items that we can apply out on this one. There's one more. We found one. We're going to apply that out. It's applying the rule. Looks good. Now let's go to the balance sheet and see what has happened. And again, we know what's happened. It's going to apply it in the balance sheet. It's going to come out of the checking account. So it's going to be removed from the checking account. The other side is going to be going to the equity. It's going to be down here in the equity section, and it's going to be in the draws. That's kind of the confusing component here. The confusing component is the draws item oftentimes. So it's not, this is the portion, the 40% in our case, that was personal, that's not going to be affecting the income statement, but directly going to the balance sheet. And there they are. There's the 3 auto that were broken out. If we go into that transaction, if we go into it, it's not $28 in this case because it used the rule to make a spend money, form. It's always going to still create a form when we do this, breaking it out on that 60-40 purpose. You can't see the percentage here, but it's a 60-40% going to the automobile, which is our business related, that's recorded in our books, and then the 28 that's being taken out of the draws. If we go to the income statement side of things, and we update the old income statement, then we should see an auto expense down here as well. So we see that. And if we go into the auto expense, those should be from the Shell gasoline. So we go into there, we see the activity. It's taking a little while to pull up here. So there it is. And so once again, if I go into any of these, it's not really 42 that we spent. That's the amount, I believe 40% that we put here to the auto for the business side of things. So you can see how it can kind of break that out, and it could be a useful rule to have at times. So that's going to be it for now. Let's get out of here.